I'm okay.
My name is Raymond Bola Brown.
Hi, my name is Fred Amata, and you are on to SOUQ News.
If you are watching this channel for the first time, make sure you continue to watch it because this is SOUQ News.
Shout out to SOUQ News. Actually, I don't know. I really enjoyed the little moment I spent with you, and I think with more of this.
SOUQ News. Here's the SOUQ News, who had the courage to transcend a locked-off camera and actually have a conversation with a human being. It's a pleasure, SOUQ News. Thank you very much.
In the heart of sub-Saharan Africa, where commerce meets progress, welcome to SOUQ News, your source for business, economy, and development insight that drive nations forward. From the vibrant streets of Lagos, Africa's fastest economic hub, SOUQ News takes you on a journey of discovery, analyzing and reporting the facts that lay the foundation for growth and development. We don't just report the news, we create it. SOUQ News is more than a channel. It is a catalyst for change, spotlighting the stories that shape economies, inspire entrepreneurs, and fuel progress. Covering business, finance, technology, energy, and many more, SOUQ News provides a daily deep dive into the stories that matter, interviews with industry titans, and analysis that empowers your understanding of economic landscape. Join us daily as we dissect, discuss, and deliver the most relevant and factual news on business and the economy. SOUQ News is your trusted guide, empowering you with the knowledge to make informed decisions. The National Theatre, Igomu, built during the military regime of Olusegun Obasanjo and finished in the time for the Second World Festival of Black Arts and Culture, FESTAC, in 1977. The theatre holds amazing treasures and memories. The artworks fill everyone with pride. The National Arts Theatre is visible from the motorway which connects Lagos Island and the mainland. The National Theatre is packed with the artworks of a legendary contemporary Nigerian artist, stained glass walls by Yusuf Grillo, sculptures and murals by Lamidi Fakeye, Erabo Emopai, and many others. It was put to full use for a month as one of the 4 venues of the Second World Black and African Festival of Arts and Culture, tagged FESTAC 77. The complex hosted 16,000 participants from 56 African countries and the diaspora in an unprecedented showcase of African music, fine art, literature, drama, dance, and religion. The National Art Theatre was built and designed by Techno Experts Troll, a Bulgarian company mirroring the Palace of Culture and Sports in Varna, Bulgaria. Completed in 1976, the building is one of the largest and most beautiful of its kind on the African continent. It consists of a central hall with 5,000 seats, a collapsible stage that can be quickly rebuilt,
Hello and welcome to Market Insight. I am Lavina Emma. Now it's the start of a new month and today is Easter Monday, so happy Easter to you. So it's the beginning of the second quarter of the year 2024. And in today's top story, the Central Bank of Nigeria has announced a significant increase in the minimum capital base required for banks operating in the country. Now, this move is aimed at strengthening the nation's financial system, and it has set the new benchmark at a staggering 500 billion naira for commercial banks with international licenses. Now, the minimum capital base varies for different banks. For instance, a commercial bank with a national license, the minimum capital base will be 200 billion naira, while a commercial bank with regional licenses, the minimum capital base will be 50 billion naira. The minimum capital base for a merchant bank is also 50 billion naira. And lastly, for non-interest banks, the minimum capital base is 20 billion naira. Now, as you know, under Olayemi Cardoso, he set this new record so that he wants to improve on our financial sector, on the banking system in Nigeria, both commercial banks and merchant banks too. So the last time we had banks increasing their minimum capital base was in 2005 under Charles Soludo. So you can imagine, under Charles Soludo, it moved from 2 billion naira as capital base to 25 billion naira. And now under Olayemi Cardoso, it's moving from 25 billion naira to 500 billion naira. So on today's show, we will be diving deeper into the implications of this decision and analyzing the potential impacts on the Nigerian banking sector. Join us after the break.
My name is Veronica Nkechi Eze.
Charles Abana.
My name is Professor Martins Emeje.
Professor Sylvester Odion Akaine.
Keep
Watching
SOUQ News TV.
The best news channel online.
It's elevating, it's enlightening, it's educating.
Muhammad Ali found this truth in Africa. Rumble in the jungle. I swear the king is humble. Jesse Jackson, O.J. Simpson, this is black history. Andrew Young visit Africa in the late 60s. Legend, Bob Marley make the light different. Martin Luther King and Malcolm X are big names. They fought for black Americans in the old days. We need the same revolution in our own ways. Michael Jackson, Janet Jackson, Mr. Jay-Z, Snoop Dogg, Dr. Dre and Eddie Murphy. American prosperity ain't complete with African poverty. It's legendary Idris Abdul Karim, and you are on to SOUQ News. You don't touch that dial.
Welcome back. So to discuss these new issues and these new directives from the Central Bank of Nigeria, my guest this morning is Mr. Sam Oworuje from the Director Center for Public Policy. So welcome to Market Insight, Mr. Sam.
My pleasure to be here, Lavina.
Okay, I'm happy to have you here. Now, as I mentioned earlier on, all banks, whether they are commercial banks or merchant banks or non-interest banks, they have from April 1st, 2024 to March 31st, 2026. So that gives them approximately, let's say, 2 years to reach this capital base that the CBN governor just directed. So that's whether it's 500 billion naira or it's 200 billion naira, whatever the amount, they have about 2 years to get to this amount. But before we get into that, so I hope you enjoyed your Easter on Sunday, and also, yeah, today you're here with us in the studio.
We thank God. Happy Easter.
Yes, happy Easter to you too. Okay, so I want to ask you now, so what are the potential impacts of this new policy on Nigerian banks?
Thank you very much, Novila. First thing, let's put it into perspective. The Central Bank of Nigeria has a mandate from time to time to raise the minimum capital outlay for banks, and that's what you call capital adequacy ratio, which is within the purview of the central bank to raise the capital of at which banks can operate within Nigeria. So there are classifications. The first one has to do with banks that has international dimension, what means they have branches beyond the national boundary of Nigeria. So those ones are required to have over 500 billion in terms of capital adequacy ratio. That's international in terms of those who have a network within the West Coast, some have in the United Kingdom and all that. Then you have another set which operate nationally. What that means is that they have branch network within the country, not limited to some region. So those ones are NES. Then after that you have those ones that have regional dimension. There are some banks, I wouldn't want to mention them because of adverts, who operate just within Lagos. There are some who operate within northern Nigeria. There are some who operate in the south. There's a branch that operates between Asaba and Port Harcourt. So those are within the regional. Then you have merchant banks that are dedicated to merchant bank financing. Then finally, you have non-interest bank that are based on Islamic concept of not charging interest. Those are the ones that are non-interest rates, which are the last within the threshold of 20 million. So the central bank has that mandate to say this is the minimum capital adequacy ratio that each bank needs. And within the banking, the principles and practice of banking, capital adequacy is very important in terms of in principles and practice. So the central bank, from time to time, after looking at the books, what they call acid tests of some of the banks, they come up with new framework that we have to set the tone for the operation of commercial, merchant, regional, and non-interest banks within the country.
Okay, so I'm quite certain that going forward, this will definitely affect competition within the banks, like whether commercial banks, to be specific, there will be more competition to achieve their capital base before the deadline.
Yes, they have a 2 years window to find a way to shore up their capital adequacy. So naturally, some of the banks, the way they are, some are going to merge. Some of those banks, within the next 2 years, we will not hear some names of sub-banks. Some will be absorbed, that will be upgraded. Some will be taken over by merger and acquisition, and those names will not appear. But whatever names is on the register of those banks, the name on the shareholders' mandates, they will find a way to recalibrate the structure of those banking. But I do know for sure that many of the banks will come into the market to raise new funds. Some banks are already preemptive of that policy. There are banks who want to show up their capital already that are going into the market. So I'm sure that they will meet up with those requirements within the 2 years stipulated by the CBN.
Okay. Okay, yes, I know that they said Central Bank of Nigeria gave them the directive that it should be a minimum of 500 billion naira. So that means they could extend it. It could be over 1 trillion naira. So looking at that now, what kind of challenges do you think banks will face in meeting these new requirements? Because this is quite a very serious task for them, coupled with other things they have to achieve too.
Those banks that are ready to play and want to remain in competition, they don't have any other option than to raise the money based on the minimum requirement. That's the minimum threshold. So they could go into trillions of naira when they have the capacity to raise those money. But then take cognizance of the fact that those that has international dimension who operate beyond the national boundary of Nigeria had that kind of stipulation. So they could raise far above 500 billion. But then the challenge for most of the banks who may not be able to raise such money will be absorbed by some other banks that has the capacity. Yes. So merger and acquisition, what happened during the Soludo era will play out in the next 2 years in Nigeria.
Okay, so are we also going to be seeing cases where, I remember during that period, every now and then you could see First Bank is selling shares or UBA is selling shares. So are more banks going into the capital market to sell shares to try to give their financial base a lift?
Yes, I think so. Most of them, to raise those kind of money, I'm sure that the shareholder equity in terms of raising money from shareholder will not be able to meet this kind of requirement. So many of them will come into the market to show up their capital adequacy by issuing IPOs so that people can purchase those shares in order to meet those requirements. But some of the banks, in my view, particularly some who are operating nationally, may not be able to meet those requirements. So measure will come up, and some bank will just take in some of the banks. So the number of banks that currently operate in Nigeria, maybe about 20-something of them, will now reduce further, in my view, when this exercise is concluded by March 31st, 2026.
Yes, okay. So now, how will this impact Nigeria's banking sector's attractiveness to foreign investors? As you know, the government has been even calling for more foreign investors to invest in different sectors of the economy. So with this new directive from CBN, will this situation be more attractive to foreign investors? Will they think, oh my goodness, they've given them another new policy in spite of the hike in interest rate? Now they want their banks to improve on their capital base. So does this mean that it might get them a bit jittery, or it might boost their confidence and say, oh yes, I think the CBN governor is giving a very new directive? So what do you think about this, Mr.
I think it will boost their confidence in terms of the investment in the banking sector, because there are basic parameters by which you can assess banks, and one of them is capital adequacy, which the central bank has taken cognizance of. You talk about the efficiency of the bank, to what extent they utilize the deposit and money they have in the bank. Then you talk about soundness of the bank. It has to do with management and some other basic principles which help the bank. So to that extent, foreign investors, particularly portfolio investors, where they want to shore up their capitals, some of them will bring in money and buy into some of those banks. So I think it will boost investors' confidence. Number two, the capacity of the banks to lend to the real sector will improve based on that capital adequacy. Now, there are some challenges even in the banking sector that you go to some banks, you're not even able to get cash. You queue on the ATM. Though with financial inclusion where you have POS all over the place, they are thinking over some of the functions of the traditional bank. So in my view, this new minimum capital outlay for the commercial banks, merchant bank, non-interest rate bank, will boost investors' confidence. Even the confidence of local investors will improve. The liquidity ratio in terms of how liquid these banks are will equally improve in terms of the ability to lend to various sectors of the economy. So I think CBN, with its oversight function on the banking system, has done well to see how you can shore up the capitals of these banks.
Okay, thank you for that, Mr. Sam. But there was something you mentioned when you talked about how you go to the ATM machine to withdraw money, and then you see temporary unable to dispense cash, or you could see this ATM is not dispensing at all, not even a temporary situation. And now we have the rise of POS operators, and these days there's a growing trend. People prefer to get physical cash from POS operators if you're not entering the banking hall, that is. And it's like we have accepted it. Like I remember this started last year, January 2023, when there was the change in the currency, the redesign of the currency, and then everybody had to use POS operators to get physical cash. Eventually that's phased out. We're able to go to the banks. But nowadays, when you try to use the ATM, temporary unable to dispense cash, you have to use the POS operator. So it's almost as if the POS operators have decided to take over this gap, because traditionally the ATM should be able to do this. So do you think with this new directive from the Central Bank of Nigeria that banks will be able to level up and ensure that their ATMs function properly and we don't have to keep relying on POS operators all the time?
I think in my view, when you go to the ATM machine, the tellers are unable to dispense cash. It shows to me that there's some little problem within the banking sector, which essentially has to do with cash. That's on the one hand. On the other hand, financial inclusion, which the POS represent, is a welcome development. It's another banking, retail banking form that has brought financial service to the grassroots. So it's a welcome development in terms of financial inclusion. But then the bank traditionally should be able to put money in the ATM. It's sad that you go to ATM teller, what you see is a queue that the bank is trying to avoid from the banking hall. So I'm sure that has to do with some level of liquidity. But I think the bank should be able to sort that out. But nothing absolutely wrong with financial inclusion, which the POS has come to play in Nigeria. So we will have more and advocate for more financial inclusion, particularly in rural area where banking, retail banking services can be accessed from any point. In addition to cash, what the bank should emphasize on is to what extent can people improve on using the application to do more transactions so that you avoid cash transaction. So once you eliminate cash transaction, these issues of people taking people to the ATM to go and collect their money in terms of fraud will reduce minimally.
Yes, yes. Okay, I like what you said. So we have more people, I mean, these POS operators going into, like, let me say, deep into areas that have very few.
Yeah, that's what we call financial inclusion.
Financial inclusion.
We are not even there yet. We should even improve further. Yeah. And some of these financial inclusion service provider should be able to operate on online platforms to reduce cash transaction. It's a cashless society that we should be finding a way to get to where your cash, in terms of your engagement with cash, is reduced to the barest minimum. So you use application services to do all your transactions, but we're seeing an environment or a culture that support cash. People are happy when they carry big bags of cash, but that's it's very dangerous to deal with cash. Yes. Rather, we should do more financial inclusion, but some of this inclusion service provider should even develop applications that can help their customer do a lot of things without even dealing with cash.
Yes, yes, I totally agree with you on that. We have tried to make, but don't you think more education should be given to Nigerians, not just in urban centers, but in the rural areas? Because last year, permit me to keep quoting what happened during the Naira redesign period, the emphasis was on trying to see how Nigeria can operate as a cashless society. So the use of more POS, more transfer, using the banking app to transfer money when you want to pay for things was encouraged. But in the long term, it wasn't very effective. People were still demanding for the physical cash. So don't you think banks need to, like, maybe perhaps part of their CSR to actually educate people more on the need to operate a cashless society? So that means using the banking apps to pay for whatever goods or services, or using the POS to pay for whatever goods or services. That means using your ATM cards to be more precise.
The central bank is already doing that. Commercial banks are already doing that. I think what we should do is to scale it up in terms of advocacy, so that this cultural incentive or the way we are tied to cash is reduced. I believe that a cashless society is better for it, and when you are able to do that, some of the sharp practices or corrupt practices within the financial sector, or even some other sector, will reduce minimally. So the advocacy is there. You need to scale it up so that we can benefit more.
Okay, but I feel that it should be more, it should be encouraged in the rural areas, actually.
No, the rural areas are already taking advantage of that.
Cashless society.
Yes, yeah, they use more of these POS all over the country. Rather than traveling even to kilometers away where you have some few kilometers where you have banking presence. But then the POS are everywhere. Yeah. There's no rural community in Nigeria that you get to that you can't even access the POS. Even in the rural community, I had an engagement in one rural community in Ekiti State, where even the charges were far less than what we pay in the city of Lagos. So I think they are everywhere.
That's good to know. Okay, so thank you very much for that, Mr. Sam. So I'm still discussing with my Sam the Central Bank of Nigeria's new policy to commercial banks and also non-interest banks and merchant banks to actually improve on their capital base, increase it from 25 billion naira to 500 billion naira for the commercial banks operating an international license. So when we return after the break, we'll discuss further with Mr. Sam as to how this will affect the economy concerning small businesses and credit facilities. Stay tuned.
Lateef Jakande. Born Lateef Kayode Jakande in the Ekbetedo area of Lagos Island, Lagos State on July 1929. He studied at the Lagos Public School at Enowa, Lagos Island, then at Bonham Memorial Methodist School, Port Harcourt, King's College, enrolled at Ilesha Grammar School, where he edited a literary paper called The Quarterly Mirror. Jakande began a career in journalism in 1949 with the Daily Service and joined the Nigerian Tribune in 1953. The owner, Chief Obafemi Awolowo, appointed Jakande editor-in-chief of the Tribune in 1956. Jakande established John West Publications in 1975 after leaving Tribune and began to publish the Lagos News. He served as the first president of the Newspaper Proprietors Association of Nigeria, NPAN. Jakande ran for election as executive governor of Lagos State in 1979 on the Unity Party of Nigeria platform. His administration was effective and open and implemented the cardinal policies of his party. He introduced housing and educational programs targeting the poor, building new neighborhood primary and secondary schools, and providing free primary and secondary education. He gave poor people's children education, and many of them are now very prominent in the society today. Jakande established the Lagos State University and constructed over 30,000 housing units. After the military takeover in 1983, Jakande was charged, prosecuted, and convicted of treason and later pardoned. He served as Minister of Works under the Sani Abacha military regime. He died in Lagos on February 11, 2021. Lateef Jakande was the first civilian governor of Lagos State. Lateef Kayode Jakande, SOUQ Enlightenment.
Welcome back. So I am still talking with my guest, Mr. Sam, who is a director at the Center for Public Policy. So welcome back, Mr. Sam. So yes, so before we went on the break, I mentioned that I want to know if your thoughts on this, please. If this policy could lead to unintended consequences for example, access to credit for small businesses, because I know when you're trying to level up your capital base, and even be a small-time business person requires capital for his business, or maybe to expand his business, and the banks are like, I don't really know what their thoughts, what their actions would be during this period. So.
No, I don't think so. Rather, as they try to shore up their capital, you do the normal legitimate lending, which the banks are meant to do. So I don't think, in my view, it will have any negative impact. Rather, in the final analysis, by the time they are able to shore up their capital within the next 2 years, there will be more money to lend. And the lending ratios to various sectors, based on CBN requirement, will equally increase along those line in terms of the volume of capital adequacy that the bank have. So in the prudential guideline, the ratio of their lending, because they had a higher capital, then the ratio of their lending too will be higher as well. But in the short run, they will continue to do their legitimate business, because the banks are there to lend money. Yeah. And it's only when they lend money that they can earn more money. So for them to be profitable, they have to lend money. But the current lending ratios based on the CBN prudential guideline, I'm sure that the banks are not even able to lend to some of the sector. But then from supervisory regulation, central bank should play more role on saying that the banks lend to the various sectors based on their capital adequacy ratio, which is given from time to time by the central bank. So more supervision should be made on the bank so that those sectors that they don't currently lend to, they should lend to those sectors so that we can achieve some growth in the economy.
So that means there's a possibility that, for example, if a business person requires a certain amount, there might be a hike in the interest rates, all because of this new directive, or it's still going to be the same business as usual?
No, the CBN
Yes.
in their last month meeting,
yes.
they have increased their lending to the commercial bank from 22.75 to 24.75%. No, naturally, so this is the cost at which the CBN is going to borrow to the, lend money rather, to the commercial banks. Therefore, if you are taking money from the CBN at 24.75%, then naturally your cost of fund has increased. So that ratio will equally increase at which you lend to your lending public. Therefore, the cost of fund will go up marginally, and it will impact on the interest, the rate at which commercial banks give money to those who take money from them.
Okay, thank you for that insight. So, okay, now, Mr. Sam, now to what extent will this policy achieve its stated goal of strengthening the financial system, considering factors like risk management and risk management practices and asset quality, actually, within the financial sector?
All right, even the question itself speaks to that already. Once you have a bigger size of capital to operate with, then your risk appetite naturally will be large as well. So positively, if you have a large size of capital as a bank, then your appetite for lending will increase as well. So that means your risk, your ability to take on more risk in terms of the sector you can lend to will improve dramatically. So your asset quality as well, in terms of efficiency and profitability, which are some of the core elements of banking, will to a large extent help you to be able to reach your profitability ratio vis-a-vis your asset quality and the efficiency at which you deploy capital in terms of lending to your consumers.
Okay, thank you for that. So, okay, now looking at the situation in Nigeria right now, we know that we have inflation, which is really growing right now, especially food inflation. But to talk about the inflation in the economy now, do you think this new directive from CBN will have any effect on the inflation in the economy in terms of, because analysts are predicting that our inflation will rise beyond 31%. They're looking at maybe 32 to 35%. So, in this same year, the CBN is also telling banks to increase their capital base. So, I don't really know. I feel like we haven't solved one issue and now we're about to get into another one. Don't you think this is a bit too heavy on our financial sector?
No, I don't think so. In my personal view, the bank, CBN in particular, wanting to raise the capital adequacy of the bank shows that they want the banks to be sound in a way that they are able to lend appropriately, and we don't run into a situation where there will be a run on the bank. That means the banks don't have sufficient capital to operate, and when you have some lending that has fallen bad, what they call doubtful debts, and the banks are unable to securitize those lending in the first instance, then there's going to be a problem. So the capital adequacy ratio, which the central bank has done to be able to stabilize the bank, will be better in terms of its ability to render financial service to the economy. So I don't see any major challenge. On the other hand, interest rates will continue to rise as long as the CBN give money at a higher interest rate. But then, once the foreign exchange regime and over-dependence on imports as a country is reduced, then we're able to reduce the interest rate to 1 digit as it is being practiced in the global north.
Okay, so this will not really just affect, I mean, you know, right now most economists are saying that what with the, our government should be focusing on is how to reduce inflation. So coming up with policies like this, does it really help to reduce inflation? I know we talked about on this program, talked about it shouldn't just be the monetary aspect. There should also be some improvements on our fiscal policy, but we just feel like there's going to be so much rush amongst Nigeria's financial institutions to actually achieve this, that going further, things like, okay, let's try to see how we can help our rural areas. Let's try to see how we can help improve on transportation. It might be ignored to, look, we have a deadline to meet. We don't really have time to be focusing on things like this. So I'm just giving an example.
I'm sure that the CBN will have done its acid test on the bank in terms of their viability, in terms of the capital adequacy ratio, in terms of efficiency of the bank, even in terms of their balance sheet vis-a-vis profitability. And they've come out that we need to shore up the capitals of the bank. So that is in the right direction. I don't think that it has to do with interest rate. So there are two elements. The banks need some level of capital adequacy to be able to operate efficiently, even as a bank, particularly those that does business beyond the boundaries of Nigeria. But then the CBN, beyond the common mandate of this capital adequacy, in terms of how they control the rate of money supply and inflation, I'm sure that they're able to do that with good supervision over a period of time. Over-reliance on import and the dominance of the foreign exchange market, particularly the use of dollar, should be reduced to an extent where we're able to support local industry so that we don't depend so much on forex. So, but in my view, these are two different elements. You need to shore up the bank so that you have a situation where your banks are sound, and so that you can encourage investors, then they can lend more to the bank customers or consumers, as the case may be.
Okay, thank you for that insight, Mr. Sam. Yes, you really went in depth into that. Okay, so now we know that these issues will not actually clash with what directives that the Central Bank of Nigeria has given in the past. But I want to ask you now, how will this policy impact long-term, like looking at our growing economy, how will this impact the Nigerian economy, taking into account our potential changes in credit availability and financial inclusion, actually? I just want to know the impact.
No, the more sound the banks are, the better it is for the economy, particularly when you talked about foreign investment earlier. Once that financial sector, which is a driver of services, particularly financial services within any given economy, that will help for people to believe in that economy. And as we speak, I think we are the fastest growing economy in sub-Saharan Africa. And once that kind of sound bank management is in place, then people are encouraged to come and invest in your country. So in the long run, it will benefit the banks in terms of their profitability and asset quality. Then more investment will come. They're able to lend to the real sector. Then once the economy is operating optimally, then it will benefit the country in general.
Okay, so we're looking at a positive growth in our economy in the future.
There's no doubt about that. Once you have that kind of banks having those capital in terms of minimum threshold, so in terms of the ability to be able to get deposits and lend to the real sector, then it's better for everyone in the country.
Okay, now, I'm just going to give an instance right now. Now, if you were part of the central bank's monetary policy, not necessarily the monetary policy committee, but having to regulate financial institutions in Nigeria now, would you have suggested an alternative to raising their capital base? Like, what do you like? Any other alternative regulatory policy besides raising capital base that the CBN should consider? there should just be options, should not just be, okay, now let's do something new in our financial sector, let them raise their capital base again. Yes, we know it's been a long time since they have done this, but aren't there other objectives or other options that they could use for the banks to just improve on them apart from raising the capital base?
Interestingly, raising the capitals of a commercial bank or any other kind of bank is within the purview or within the mandate of the Central Bank of Nigeria. And I'm sure within the wisdom of those who are central bankers, they will have done what I mentioned technically as a test of some of these commercial banks. It's within their purview to raise the capital when they feel that the capital adequacy ratio, which is one of the core elements of banking, is challenged. They have no option than to raise that capital. Mind you that when this regulatory framework is put in place, it does not necessarily mean that some banks will survive this kind of new requirement. So merger and acquisition will come into play. Yes. And those banks that are not strong enough will be absorbed by some other banks. And that will help to clean up the financial service. So if I was sitting on the other side, regrettably, I'm not one of them. But then, I think within their purview and their mandate, they've done what they need to do to save the financial service sector of the country.
Okay, so apart from increasing capital base, what other measure would you have liked to implement with our financial institutions?
No, greater supervision by the central bank of these banks. Find a way to see how we can shore up our foreign reserve by not depending so much on imported items. So then the central bank need to improve on the inflation, on the interest rate at which they lend to bank. Once they are able to have this holistic policy in place, then the financial service sector will improve. On the side of government, a fiscal policy regime that is very disciplined as well to balance out what the central bank is doing will help to stabilize the economy.
Okay, thank you for that, Mr. Sam. Okay, yes, as you mentioned, you talked about mergers and acquisition, and as you know, the first time this measure was, or this instruction was given by CBN was under Charles Soludo, and then he moved the bank's capital base from 2 billion naira to 25 billion naira, and now we're moving from 25 billion naira for commercial banks to 500 billion naira in minimum. That should be the minimum capital base for them. So now I'm certain that a lot of consumers, or let me say depositors with all these commercial banks, will be a bit worried as to how they will cope with the new mergers and acquisitions, what's going to happen to their funds. And I'm quite sure, yes, the government already has the Nigerian depositors' investments to actually protect consumers or protect people who are depositing their money in financial institutions. But looking at consumer protection now, how secure are people be seeing that banks are going to level up their capital base, and then they need some form of reassurance that they will not be affected? Because in the past we've seen banks fold up, and then consumers are wondering what's going to happen to their money, like if I'm allowed to say, the former Savannah Bank of a few years back. So we've seen these experiences before.
Currently, the banks are not going order. What is important is that the CBN has wielded the big stick in terms of what they think should be the minimum requirement to be able to operate bank, particularly those that do have international branches. But what is important, the Nigerian Deposit Insurance Company already had depositors' money insured, but then I don't think we have gotten to that level of lack of confidence in the banks to be able to secure deposits. What is key in this is that those banks that cannot raise some of those money may have to go with some other banks that have the capacity to raise this money. So once there's a merger, your deposits, assets and liabilities of the banks are taken over by those new bank that is taking them over. So if you look at the other side of the balance sheet, both liability and assets. Whatever side of the balance sheet that those banks will be operating on at that particular point in time, shareholders' funds are safe, depositors' funds are safe. Those liabilities of the banks, in my view, based on the credits and lending principles that were put in place when those monies were given out, will be safe as well. So, but then the name of the bank may just be name that will change, and over time, once those changes do take place, what is important is that they may have a new bank, and the portfolios in terms of deposits will change in names, and whatever deposit that you have, even as a customer in the bank, is insured first and foremost. Yeah. Two, that asset will move in to whoever buy those banks. So once a new banks come up and take over another bank, they buy the assets and liability as well. So in my view, consumers and customers of bank should not be worried about the new capital adequacy requirement by CBN. This is going to take some 2 years to get through with this, and nothing, in my view, will happen, no cause to panic.
Okay, yes, I like that. No cause to panic at all. Yes, it's something that we need to be telling ourselves more often in this country. Okay, but still on consumer protection now. As you know, every time there's a banking transaction, whether it's online or within the banking hall, there's a certain charge that banks usually charge their consumers or their depositors, actually, whether it's to withdraw a certain amount of money, or from, let me say, a minimum of 5,000 to 20,000 naira. There's an amount they always charge, and the higher you withdraw or the higher you transfer, the money keeps going up. And in the past, consumers have complained about this money. Some of them have said that maybe the monthly charges could be as high as 200 to 300, and it varies from banks to banks. Different commercial banks have very high charges when you keep using their services, either with the banking app or either with the POS or with the ATM machine, or paying for things just randomly. We can't even start talking about when you need to buy things abroad, actually, like when you're transferring something maybe with an international company, DHL, for example. So the monies keep increasing. Now, is there any chance that with this increase in capital base, maybe these charges might be dropped a bit? Because it's something that a lot of consumers have complained about.
There are two sides to your question. Number one, some of those charges are regulated by the central bank. Okay. So those charges, we're in an environment where we do transactions, and when we go into transactions, we don't look at the various elements of the contract. So Nigerians are very quick to say banks are charging them for certain services which they may not have taken cognizance of when they go into those transactions. Some of those transactions are legitimate charges that are regulated by the CBN. There are some other charges which are not within the purview of the central bank, particularly things, telecoms, charges for SMS and all that, which are not mandatory, as it were. So if you think that the banks are charging you certain elements which are not the mandatory charges, then you can approach your bank. When you're filling your KYC form, there are certain elements you put there. Do you want to receive via email, SMS? Those are commitments that you have made to the bank when you were filling your KYC form. But now when they make those charges, you are complaining. I'm not speaking for the bank. I'm not a communication expert speaking for the bank. But I'm saying that Nigerians should be aware that there are mandatory charges, because it's a transaction. The bank does transaction and needs to earn money from those transactions. Those that are mandatory, yes. Those that are not compulsory, as a customer, if you don't want an SMS charges, then you go back to your customer service consultant in the front to say, well, I don't want an email, I don't want that. But those are mandatory, must be charged, because the central bank have the window But then you have the opportunity to go to your customer service and demand what are the charges. Once you know those charges, the ones that are not deployed, that are not mandatory, then you can remove them so that you don't complain. But people must know that once you approach the bank to do certain things, they are there to earn money. Is this money that they earn in trickles that make up those large profits that they declare?
Okay, and in terms of getting, you know, for example, when you want to order things online, maybe from a foreign country, and then you see the charges are really, really high, and then you're thinking, but it wasn't like this in the past, and recently this has just been increased, actually. Like if you're going to pay for something and it requires DHL, for example,
no,
to ship
the charges are regulated in terms of, even if you are doing international transfer, maybe you want to transfer a foreign currency, the charges are equally regulated. They are percentage of what you pay as commission and all that. So more often than not, people just make claims that are not justifiable. I'm not speaking for the bank, but then there are certain basic principles in financial transaction or financial services that are regulated by the CBN. Even if it's an offshore transaction, they are equally regulated, and the percentage stipulated on the form that you fill. But more often than not, we don't look at the element of those transactions. At the back of every form, you have the disclaimer and all the information that you need to adhere to at the back of the form. But we're always in a hurry to get those transactions done. But then when they now advise us based on the charges, they will begin to complain that the banks are charging abnormal or unwholesome charges. But those charges are regulated. But the charges that are not regulated, which the customer may have put on his KYC form, need to be reviewed from time to time. So if you don't want an SMS, you go to the bank, that will be reduced. That will be removed from your charges as well.
Okay, so just before we round up now, Mr. Sam, yes, I understand everything you said. Thank you very much for going in depth into this issue and enlightening all of us here watching you. Now, we understand this was a good initiative from the central bank governor. Yes, we do applaud him for this. But looking at our economy right now, just to round up the program now, what is the impact and implication of this on our Nigerian economy? Just your final thoughts on this to round up the program.
I think the capital adequacy ratio that has been put in place by CBN is welcoming. That will help to strengthen the capacity of the banks to lend more. That capital adequacy ratio will equally make foreign investor to believe in Nigeria economy, that the banks within Nigeria, they are strong. They have all the elements for banks that are international as well. And this will help us to improve on the economy as a whole. And more lending will come into the sector. And once you're able to lend more, then the economy will be operating optimally to the benefits of every citizen.
Okay. Thank you very much for joining us this morning on Market Insights, Mr. Sam. As a Director for National Public Policy, we appreciate your coming here, and we look forward to having you again on Market Insights as we delve into this issue, as the Central Bank of Nigeria has created a new minimum capital base for banks all over the country. And thank you for joining us this morning to discuss this issue.
Thank you for having me. Happy Easter once again.
Yes, happy Easter to you too. So that was our time this morning on Market Insights as we discussed the Central Bank of Nigeria's policy on banking sector, both with commercial banks, merchant banks, and non-interest banks, and how this new capital base will affect the economy in Nigeria. And as Mr. Sam rightfully said, it's a very good directive, and it's going to be something positive for all banks all over the country, and it's also going to attract more foreign investors that will have more confidence in our banking sector. So I am your host, Lovina Emma. Thank you for joining me this wonderful Easter morning as we talked about this issue, and we look forward to discussing more issues affecting our economy on Market Insight. So stay tuned to the next program on SOUQ News Television.